Hello traders, welcome back to the Forex Gig where we dive deep into the tool that can help you make smarter trading decisions. And in today's video, we are going to be talking about the 1 VWAP day trading strategy. This approach works across all markets and can significantly enhance your trading performance. We will explore what the VWAP is, what is crucial for day trading, and how you can implement this strategy effectively. So stay tuned to learn a method that could transform your trading results. Alright, we start by understanding what the VWAP is, and the VWAP is the volume weighted average price, also known as the VWAP. Is an essential indicator that combines price and trading volume to calculate the average price of an asset over a specific time frame. Unlike simple averages, the VWAP accounts for the weight of each transaction based on its volume, offering a more accurate reflection of market sentiment during the trading section. The VWAP is calculated using a straightforward formula, dividing the cumulative total of the product of price and volume by by the typical cumulative total volume. This calculation begins by determining the typical price for each period, which is the average of the high, the low, and the closing price. So multiplying this typical price by the volume of that period to give the weighted value, then sum this weighted value and divide them by the total volume to arrive at the VWAP value. This is basically what this indicator has done automatically for you. All this calculation has already been done on the indicator. So let's see how we can apply the VWAP to our trading strategy. And what we are going to be using will be the VWAP crossover trading strategy. And this strategy offers a straightforward approach to identifying potential trade opportunities across various markets. This method focuses on the interaction between price and the volume weighted average price line, providing a clear signal for entries and exits. So to implement this strategy effectively, you would need to add the VWAP indicator to your chart. And you can see I've already added this to my chart. I've added the indicator to my chart. Let me tick in the line to make it easier for us to spot. When we have added it to our trading chart, we have to know that most trading platforms offer this indicator. It allows you to overlay it on your price action. As you can see, the indicator follows price closely. Once you have the VWAP indicator in place, you would want to watch for price crossover. Now, a bullish signal happens when price crosses above the VWAP line. As you can see, price is trading above the VWAP line at this area. This means a bullish crossover. This suggests that we'll be looking for bullish trades because we are expecting potential upward momentum. This is what it indicates, potential upward momentum. Conversely, when you see a bearish signal, it is generated when price crosses below the VWAP line, trading below the VWAP line. As you can see it in this area, this signals and suggests downward pressure. So when you spot a crossover, it is crucial to confirm the signals with other additional factors. You can look for an increased trading volume, so we can make use of our volume indicator with this. When you confirm using a crossover, you can wait to see if the volume confirms your crossover, and as you can see, there is an increasing volume at this area, signaling the downtrend is a strong downtrend. Even at this area where we saw a bullish crossover, you can see signals of strong bullish trends in the market. We can also consider using other technical indicators such as our RSI. We can use our RSI. We can also use our MACD. These are the indicators we can use to confirm the trend. As you can see at this area where price was trading above the VWAP line, you can see from the RSI it was trading above the 50 region, signifying is in an uptrend. And at this area when it was to the downside, it was trading below the 50 region on the RSI. Then from the MACD, we can see that there was a bullish crossover with the signal line and the MACD line, and we can see the MACD histogram showing bullish trends. And at this bearish area, we can see there was a bearish crossover from this area, and we can see that the histogram was showing series of bearish confirmation. So this is basically how we can confirm using additional technical indicators to confirm and support our decision. Now for entries, you have two main options. You can enter immediately upon you see the crossover. So immediately we see the crossover, we can enter immediately we see the crossover, or you can enter when you see a pullback, a little bit small pullback to the VWAP line. So you can enter, either you enter when you see the crossover at this area, or you can enter the moment price comes back to retest the VWAP line. This would have been a very good place to enter the trade too, where you see a retest of the VWAP line. Remember, setting your stop loss is very important. You set your stop loss at a very crucial place for risk management, and a common approach is to place your stop loss just below the recent swing low, in a bullish trade, while in a bearish trade, when we see the retest, we'll place it just above the previous swing high. You can see this area is a swing high. This is where you can place your stop loss, and you give your trade you give your stop loss enough space, hereby giving the trade room to breathe while limiting potential losses. Then as for your take profit, you can use previous support areas for your take profit region. You can put your take profit as previous support areas for your take profit, previous support areas or previous resistance areas for your take profit. You can take your profit at this low too. These are previous support or resistance areas for your take profit. You can also use a trailing stop loss by moving your stop loss upward when price moves in your direction for a long trade, and bring your stop loss above your entry during a long trade. For a short trade, you put it below your entry to secure your profit in a short trade. So by mastering this approach, you would have a valuable tool in your trading arsenal that can be applied across different markets and time frames. Alright traders, we have come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, do not forget to like, subscribe, and turn on the notification bell so that you will never miss out on more trading tips and strategies. Thank you for watching, and I will see you in the next video.